Nick, good morning. It is Thursday. It is the Money Clinic. How are you feeling this morning? England have just got into their first final in 50 years. How
Yeah, I can
do you feel
see.
about that?
I'm obviously delighted, and I can see the delight on your face as well.
Yeah, well, I thought it would be important that I nail my colours to the mast. Looking forward to the game on Sunday. How do you think it's going to go?
Uh, it's going to be a tough game, right? There's no doubt about that. I didn't think England was spectacular last night. They did the job. I'd like to think they're going to beat Italy at the weekend. I'd just like to say that you are plumbing new lows with the jersey that you're wearing.
Well, as I am half Italian, I thought it was the honourable thing to do in the build up to the big game. But let's move on to more interesting matters and the financial markets in the last week. Has there been any changes in the last 7 days? Have you seen anything interesting happening?
Well, the markets are weak today. They've fallen off from yesterday. The Fed minutes came out, more dovish stance than was probably anticipated on the back of those rate increases that were forecast last time round. So the markets went up yesterday, but then they've fallen away today. There's a few tech issues or technology stock related issues out in China. Lots more regulation coming that way. Big sell off there, and this COVID variant, Delta or whatever it's called these days, is causing issues out in Asia and Australia and places like that as well. So the markets are off a little bit, waiting for the US markets or the opening bell to come in New York this afternoon. And everybody's waiting for earnings, expects them to be spectacular, and maybe there's an opportunity to buy at the moment.
Yeah, we talked about this before we had record, but I mean, it just seems that the financial markets, the stock market, the housing market, private equity. I write a weekly business update every Sunday, and I wrote last week about private equity companies are having their best year ever. There was over 6,000 private equity deals done this year to date. I mean, there just seems to be so much money out there in the markets. What do you think is behind all of this? What's going on right now?
Well, there's a couple of things, I suppose. I mean, everything goes hand in hand. The stock markets are doing well. There's more money available. The private equity firms are doing well. The housing markets are on an uptick as well. So they all tend to go hand in glove and move at the same sort of time. But, you know, there is a massive fear that this is overheating. Obviously, interest rates are at the lowest rates they've ever been. They're virtually zero. So people who can borrow money are borrowing money at very low rates and are able to do and invest and build what they want at this time. But it's in danger of overheating. I mean, you know, from a stock market perspective, I'm often asked, would I buy, would I sell at this time? And you know, like I've unwound a lot of my equity portfolio and I'm pretty much just in cash at this point. And with stock markets, what you're ideally waiting for is the stock market to correct, to move lower for a period of time and then get back in. So it's always that boom or bust sort of cycle, not unlike property as well. And I'd worry from a property perspective, and I suppose this is my question to you, you know, is the property market overheating just as much as the stock market? And we've spoken about the investment funds and how they're fueling some of that. But, you know, there's been a lot of talk this week about a crash coming in the property market. Or is that low interest rate environment going to keep it going for the time being and property prices are going to continue to rally?
I think it's interesting. I mean, we're obsessed with the property market, and I like to set out at the outset whenever I talk about the property market. There's two markets. So there's the residential market, the housing market, and then there's obviously the commercial property market. I think, to be honest, the feedback and the observation I would make on the commercial side of things is that it's under a lot of pressure. Yields are being pushed out. There's not a lot of transactions happening, and retail's been obviously hammered with COVID. I mean, who's buying shopping centres today? Probably nobody. You know, how do we reinvent shopping districts? So there's a real challenge within the commercial market, within the office market. I mean, you know, there's still some companies in Belfast where their employers are still working from home. So there's a huge correction going on in the office market. I know the Comer brothers came out a couple of months ago. I think it was Luke, and said that, you know, he believes that post-COVID everybody will return to the office and the office market will stay strong. He's invested in that space, so I understand why he would say that. I do think that over the longer term, office market will be fine. So from the commercial side of things, things are quite quiet and depressed. Certainly on the housing side of things, as we talked in Money Clinic before, the only word you could describe the housing market at the minute across the world is that it's booming in Japan and America, in Ireland and Northern Ireland, all over the place. The appetite to buy houses and to buy property is just phenomenal. The availability of money is still there. Mortgage products are still available, but you need to then lift the bonnet a little bit whenever you even talk about the housing market, because there's a number of different things going on. If you look at Ireland, for example, so earlier this week, the Irish Times were reporting that Greystar, the investment fund, the American investment fund, has just bought or close to closing a deal for 342 homes in Dublin. So there's a scheme being developed by Cairn Homes, which is, there's 380 odd homes in this scheme, and 342 are being bought by Greystar off the shelf, right? And they're paying 523 grand a unit off the shelf. And I mean, to be honest with you, it's very hard to get your head around that kind of transaction, particularly if you look at the political environment in Ireland today, where we have this ongoing housing crisis for years and years and years and years. And these investment funds are coming in and they're buying up these homes, taking the homes off local people who simply cannot afford, don't have the firepower. And I have to say to you that it's very hard to talk about the housing market in Ireland without commenting on that kind of thing. I mean, what's your view as a market analyst, as a financial expert? How do you feel? How does that make you feel whenever you see and I tell you that these things are happening all the time?
Well, I mean, the word is that I'm getting more disgusted week by week with what's going on. And it's, you know, like there are so many comparisons you can draw with the financial markets and it overheating. But for me at the moment, it just looks like there's no end to it. The only people who can access money, all right, there's a few, we spoke last week about, you know, the mortgage applications are up 200%, but the number is still very, very small. The only people accessing the money at the moment are the investment funds, and they're buying up these houses as you're talking about. And it just seems to me like there's no end in sight unless the government actually get off their arse and actually do something to control the prices. Like, you know, people who have money are looking at what they can invest in, and the stock market is one of those. And the returns, you know, like I've spoken about it being at this absolute limit where, you know, the returns on their investment are going to be, you know, not only are they risky, but they're probably limited in the near term. Whereas people look at the property market, and you've said that they can de-risk some of their exposure when they're buying property, but they're also getting a significant return on their investment. So, you know, like I just question how and when it will stop. And, you know, I think we've spoken in the past that without some serious government policy to control what's going on, it's not going to stop.
I don't see it. I think there has to be the political will and the imagination to change, certainly in Ireland, and to make that impact. Just, you mentioned something about returns. So you have Bull and Bear Capital. Obviously, you're mentoring a lot of investors at the moment. What kind of returns are your guys getting on their money? Is it an annual return, or are they losing money investing with you?
It's all very different. You know, people, you know, I day trade, so everything's on a daily basis. So we don't do any, you know, what you would call, you know, investment from an investment fund perspective. It's day trading. So it does change. Last week was a good week. This week is a good week. You know, next week might be a bad week. Who knows?
So if someone invests with Bull and Bear then, and things don't go well for 3 weeks, you can just put you in the bin.
You can put me in the bin anytime, like England will do to Italy on Sunday.
So we're coming up to the end of another fabulous Money Clinic. Can you give me a score prediction for Sunday?
It'll be bad. I think they'll win 2-0. England will win 2-0.
Yeah, well, my sort of premonition is I think England will lose in penalties.
Are we finished? Are we finished this week? I think that's 10 minutes over and out, isn't it?
I think England will lose in penalties.
Didn't you say that last night?
I did. I called it wrong. But look, let's see how it goes. But I think the Italians will be too strong for England. So
I hope not.
And my cousins in Naples will be the ones celebrating. So look, thank you.
That cousin in Naples, is that Danny DeVito?
No, nice try. Okay, man. I will talk to you again soon.
Right.